Hello guys, welcome to the trading Parrot. Bitcoin is forming a double top on the 4-hour time frame. At the same time, the daily time frame is about to confirm a second layer breakdown. All of this in the context of potentially an incoming capitulation signal on the hash ribbons. In today's, we're going to discuss all of this, including general markets, the ratio charts of Bitcoin against gold and Nasdaq. Let's see how that rebalance is currently playing out. And I'm going to introduce this specific new view of the market to make it a lot easier for everybody that is watching the channel and finding a struggle to keep track of multi-time frames, which in my opinion is a must as a trader. So make sure that you don't miss that part of the video. It's gonna be a little bit more in-depth. This video yesterday, I was a little bit on the lazy side. Of course, we're gonna keep track on these big liquidation levels at 106. I'll give you my take on that and a lot more. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes? I am pretty sure that we can do that now that we're getting almost to 1,000 videos. This video I'm recording now is gonna be 997. And what's going on, guys? I'm about to make 1,000 videos. We do need 1,000 likes. Once again, I don't care that there is no retail. Videos are getting 4,000 views. We need 1,000 likes. And I got a big surprise here for those guys that love trading different and have been thinking maybe I should get a subscription to see the liquidation levels live, along with many other charts that are also offered by this platform based in Argentina. Believe it or not, I started becoming a fan of this before knowing that it was from Argentina. I was pleasantly surprised when I met the CEO speaking in Spanish with Argentinian accent. That's fantastic. Well, this sale is 25% off and it lasts until the end of May. You have to use the link in the description. In that way, it's a win-win. You get the discount and the channel gets also some cash that I use to pay my team to edit videos and stuff like that. So it's definitely a win-win. Just a few days ago, an Ethereum whale decided to short BTC, Ethereum, and Solana with 5x leverage, and suddenly he was 3.5 million in profit, and he flipped all of that into 7.6 million loss. He added almost 12 million additional to Hyperliquid with total deposits of $62 million. Definitely convinced about shorting the market. Since this was around 2 days ago and we've seen a retracement, I assume that he is currently in a win. Whatever you do, make sure you're not part of the retail mindset. In this channel, we make sure that we remove the typical retail behavior from people. We mock that behavior constantly. We slap our faces and do all sorts of routine activities. So you eventually start mimicking a little bit more market makers, making profits instead of being the usual William Wallace or something like that. We get diverging BTC inflows on Binance, whales versus retail. Overall, total inflows across all investor categories remain much lower than what we've seen in peak market phases. So there's tons of narratives like this where we compare things versus previous cycles. Many of those comparisons are fair ones. Just be aware that there has been a shift in the market of Bitcoin. There's a lot more institutions, so we have to really cherry pick across all the alpha which one really applies still. In here we can see that the inflows from whales are decreasing. We can confirm that just in a second in the Big Whale Explorer, whereas retail inflows are increasing. So in this area in here, we are seeing retail taking profits, whereas long-term holders and large holders are accumulating, particularly on days where we see pullbacks. Watch out with that. If you are in a short, profit taking and position management is absolutely key. Don't be like the example I just gave you and end up with a position of $60 million in a loss. From FOMO to fundamentals, retail surges into Bitcoin. From April 28th, when this trend turned positive, until May 13, there has been a 3.4% increase in purchases by this group, reflecting a significant recovery in small investor interest. Another comparison versus previous cycle, this time Bitcoin cycle capital flows. Each bull market has seen a massive spike in short-term holder dominance, less than 1 month. We're now at a low short-term holder presence for a bull market. The majority of the world is sleeping on Bitcoin right now. If you're reading this, you're ahead of the game. Sure, yes, but with a caveat. There is also the hypothesis that this particular cycle will end up still without the same amount of retail that there used to be in previous cycles. That is not just because institutions are coming in, it's also because of the state of inflation and all of that, sure, inflation has decreased a bit, it's been very high for a long time, and purchasing power has been diminished to a bare minimum. People are really struggling. Money printing, it is a fact. We see M2 coming up, but it needs to go a lot higher, apparently, to see an effect on people. I also think that those figures of inflation are probably manipulated. That's another discussion. So in a nutshell, I wouldn't necessarily expect that every single metric that reach certain peak needs to reach around the same projection this cycle. Don't swallow that pill, or if you do, just half of it. Matthew is saying that we are approaching the 10 SMA on the daily. I think that is currently sitting around 102.8, but since the time this post went live, Bitcoin has pinched slightly lower. To be fully honest, here we did kind of the same and then we reclaim very aggressively. In the past days, it has been quite boring because price action has only been taking care of the 100x longs and shorts. First, it hit the shorts at the highs of around 105. Once the 100x were done, then it went for the 100x on the lower end. So day by day, that is the definition of just going sideways. When price hits the 5x, 3x, or even the 10x, it requires the price to exit the range because those put the risk a little bit further away. Miles is saying Bitcoin, laugh now, cry later, thanks for playing. So this was posted around 103.5. By now we are getting very close or testing the neckline at around 101.5. If that neckline breaks, we need to discuss about that. We can talk about the technical target, but we always talk about the fake out scenario and we acknowledge either and we look for signs that support either narrative to not get caught by the fake outs that become evident once we are on the lookout for them. The difference is that retail only sees the technical target, ignores the potential fake out, doesn't manage that risk, and it just lets himself get in surprise, or herself as well. Let's have a look at the news. We got plenty of news, but actually the ones that I'm more interested is danger signs for Bitcoin as retail abandons it to institutions. There's currently an increasing interest into retail doesn't seem to care anymore about Bitcoin, like a handover into institutions, so they do whatever they want to do and people focus on smaller things, smaller crypto. You can see this chart in here that shows businesses doing their accumulation. Funds and ETFs, others, governments, and individuals have actually handed over those coins to larger ownership. All of this in 2025. And let's remember that Bitcoin was designed for retail to protect themselves from the bigger boys. And actually is going in the opposite direction, is being handed over to them. So I kind of see the point. Then we have Bitcoin miners hold sells as BTC gains 20% since hash ribbon buy signal. And I really want to pay some minutes looking at the hash ribbon indicator to show you some signs that are important. But before that, Bitcoin miners have stopped selling their BTC in what may signal the end of a lengthy distribution streak. Over the past month, miner wallet balances have increased by around 2.7k BTC. Hash ribbons data shows good times continuing for both miners and BTC price strength. And I'm gonna look at the indicator and I'm gonna challenge the article. You know that I'm a contrarian. In this channel, we don't swallow as easy as the usual retail does. 1 billion Bitcoin exits Coinbase in a day as analysts warn of supply shock. And I have like a bitter memory of this supply shock that we used to hear also in 2021 around the second peak. That supply shock trapped a lot of people. And supply shock, just like M2, are aspects that help Bitcoin going up. But like any double-edged sword, It does help, but it's also used to manipulate people. And the key there is being able to distinguish where we really are and not really assuming that if everybody shouts supply shock, everybody shouts plan B, everybody shouts M2, you probably want to at least challenge a bit those stories by looking a bit deeper into the rabbit hole. And yes, we started the alpha testing of the TTP agent AI bot, and I wouldn't say it's ready yet to fully replace me, but you can see that people here are asking things about the previous videos, getting levels, liquidation levels. For example, GB is asking TTP, what pay services do you use for your analysis? And it gave a full summary of multiple indicators I use, along with links straight to videos and timing. It takes you to the video at the precise minute where I explain that indicator. There's tons of use cases, and the good news is that today, not just the people that hold Telegram charts are gonna be invited to the alpha testing, but also every Elite member. If you join Elite, you can join my private weekly TA sessions. Today we have one at 4 p.m. UK time. People get to pick the coins that they want me to do TA. We do it live in a private session, just 10 people there or less. Sometimes they get to ask any custom question. They get to join with microphone, sharing the desktop if they want to as well. There's Q&A, and then the video goes live. You can find examples if you go to my channel to live, and all of these sessions that say private are part of that. If that's something that you would like to join, you can join today, and then as a plus, you can join as well the alpha testing. All right, let's get into CME gaps. So we are forming this double top in here. The neckline is at around 101.5, 102. On Binance, that is 101.5, I will say. And currently we are balancing from that support. So that still is not broken. We're gonna leave a line here, and we're gonna place a target to see how low that can break down, whether it can reach or not the next CME gap. The next CME gap is at 96.8, and the target is more or less 97.3. So it's around that vicinity, but not precisely within the target. We do have a very thin CME gap located at 99.2 on Binance price, and that is within the reach. It's located more or less here. So CME gap 2 is within reach, 3 is not, and 4 is not. If we get to that target, we are getting more or less around this area that was previous support that broke out thanks to an inverse head and shoulders that you can see in here. Let's go to the 4 hour and let's see what's currently going on. After we broke down on the 4 hour, and let's recapitulate, I promise you I was gonna show you this. So now for your mind picture, take a screenshot of this. It says 4 hour time frame. There's a typo there, but anyways, it's bearish because we broke down and we are still in a strong move to the downside. The pullback is in progress. We can anytime go into the next resistance, and we're gonna talk about that. Going into the next resistance means price going up. And then on the daily time frame, we already lost the most bullish support, and today we are risking losing the next less bullish support. On the weekly, we are on a healthy uptrend, but we are against resistance. We try to exit from the top of the range, and this week has the potential of building up a liquidity hand that can also produce some cracks in the uptrend on the weekly. On the monthly, we are on a healthy uptrend, battling resistance. Notice that in this bubble, I put the effect of that comment. So if we are bearish on the 4 hour, that affects days. If we are breaking some levels of support on the daily, that can affect up to weeks, or within weeks. It could be just 7 days, it could be 3 days, that as well. Weekly, battling that resistance can affect months maximum, right? That's the maximum effect. And monthly affects the cycle. Things broken on the monthly can really affect possibly all 2025. So when I say something about a specific time frame and you're watching this channel, you can come back to this image and limit the impact of what I'm saying. So if I'm saying something when I'm looking at the 4 hour time frame and I say this looks bearish, then the comment of yeah, but Bitcoin can go much higher by the end of December doesn't really apply. That means that you're not really understanding. So go back to the fundamentals of trading, and then we can speak the same language. So let's focus on 4 hour. Good. We had that support in here that we look for. From support, we went into the resistance of the white line. That was RSI 65 that I told you. We pinched the 65 by the dollar with a green candle. We got rejected from there. So that potential to go to the liquidity at 106 became impossible after a rejection. To get to 106, we needed to break the resistance of the 4 hour. So you're going to think, why did you talk about 106? That was a bad call, because 106 was a motivation that goes post a breakout of the 4 hour. I gave you the level. That level is 65. Did we put a candle close above that line? No. Then take away the idea of going into 106. The moment you see the rejection, you start thinking, maybe we are not going to go there. Maybe we're going to see a rejection of the resistance. And we did. We got rejected. Intra-candle, we touched the white line. Close ended up at 61 and we put a new low. What did we say about a rejection there? That it can produce a new low on the 4 hour. That's something, again, I say in the past 2 days. What's the current situation? Let's look at the 4 hour. We got a neckline. The neckline is right here at 101.7 to be fully precise, and we are bouncing from that support. We have two fair value gaps at 103.1 that I would like, if we are with the mindset of looking for a short in here, I would like that price does not go beyond 103.2. Therefore, a bounce from this support, if it could just maximum take the two fair value gaps, ideally none of them, right? But maximum two of them. And then if it cannot manage to reclaim 103.4 around this area and sees a rejection back to the support, I would like to see a 4 hour candle close below this after having confirmed what is our intentions with the fair value gaps first. Then candle closing here, please. No wicks. These wicks like that, intra-candle trading is the perfect recipe for the price to just go as low as it wants, but then if it closes back above support, that's a huge call to form a double bottom and then continuation to the upside. So don't put yourself in that risk. What is tradable? Well, one way to do this is to build a position against those fair value gaps. But then if you go slightly beyond that, you are out. Tight stop loss. Should I short support? What are you talking about? No one should short support. No one should long resistance, particularly if there hasn't been a shift, if support hasn't turned into resistance or resistance into support with candle close basis. If we close below this and we put a candle close there and you are already in a short, there is a larger chance that we finally do the ABC we talk about. We talk about this A, B, and C. That B went all the way to the resistance. So we got A, B, and now we are potentially in the process of doing a C. Is that C just gonna go there, or is it gonna go a bit more extended? Well, that's the question. Let's do a little bit of Fibonacci levels to calculate extensions. So an extension of 1 gives us 99.5. An extension of golden pocket gives us around 96.4, where we had the order block. Price can reclaim 46 and even go up until 58 and just face resistance again. Similar situation where we were in here. So now instead of 65 is 58. So we can update that. We don't need 65 anymore. So price can go all the way to 104.5 according to RSI, potentially still seeing another rejection right there and still complete a new low. So beyond those fair value gaps that I mentioned, we could say that the fair value gaps are the first line of defense to still remain in a scenario that we can go lower, but price can go all the way to 104.5. The downside of doing that is that still spoils a little bit our double top, right? Because we are going too high, producing kind of another top. At that point, we need to look at the picture again and see what sort of pattern that builds. If we just go to the fair value gaps, it's kind of an easy situation because we just go there and we are still within, a double top, we could say. On the daily, you can see that we closed the daily at 69. So last night we closed at support. And today we are fooling around below that support. That's intra-candle. So the price can get bought up in this area and close the day just like this with a perfect pivot above support. So watch out for that because that can be a trap as well. At this point, you're thinking, so anything can happen and I have trading paralysis. Then you go back to the 4 hour and you see what's going on in here you focus on this multi-time frame thinking. Can that happen on the daily? Yes, it can happen. How can it happen? Go down one level and see what's going on with the fair value gaps, what's going on with the 104.5. If you go beyond that, you go back to the daily, you're gonna be seeing a pivot being forming here and potential continuation to upside. If you still cannot see that, it's okay. Stick around in the channel. I promise you at some point it's gonna click. On the MACD daily, we are potentially coming in for another attempt to put a bear cross in here. The previous one, 3 days of attempt, didn't succeed. Let's see if this one is gonna succeed at 3.7k and about to cross the zero line. Nothing is confirmed yet. Remember, we are looking for that potential scenario, but 4 hour confirms it. The weekly, you can see that we are against that resistance. We were above the resistance and now we are below it. So by Sunday, we could confirm a rejection. Now, we need to do on Sunday is the sizing of that rejection. If we are still very close to the resistance, that has higher likelihood of another attempt. A big rejection with an engulfing red candle, of course, is a completely different situation. If we do long wicks to the downside and we get bought up, that's also bullish. Those are just basics of understanding candle patterns. On the weekly, we have this bullish cross. We have done a lot of progress just in a straight line, pretty much 60% of the target towards 73's target. That 73 is around 124 by today, but now we're having a little bit of a breather in there. The first resistance of CPR is still holding the price at 101.8. Volume has had a little bit of a spike in here, but still pointing down overall. And let's look at the Fibonacci levels, the hash ribbon levels. So what we see in here is the moving averages of the hash rate. And to get a capitulation signal, you need a bear cross on those two moving averages that are tracking what the hash rate is doing. What you can see here is the hash rate. The higher the hash rate, the stronger is the Bitcoin network to process things for higher security. More nodes are contributing to the blockchain. And when you see this falls in the hash rate very fast, like for example in here or in here, they do affect the moving averages, causing them to get closer. If they get too close, a moving average, and produces the bear cross, you get a capitulation signal. Capitulation signals most of the time come with some correction in the price. Eventually you get the buy signal and then you resume an uptrend or you have some relief rally at least. So being so close in here definitely is a yellow warning. That means that the hash rate has taken a little bit of 1 or 2 bullets in a row in the past days or weeks. The effect of that could be already in play. We'll continue to monitor this in the upcoming days. You won't hear this information anywhere because people set just the alerts and they get notified sometimes when it's already too late. Long-term holders are very actively and very aggressively accumulating with every dip in the price. And I'm seeing a similar trend on Big Well Explorer coming into 0.53 after being above a ratio of 1. Definitely they were depositing in this area, but now that they are accumulating, it could be possibly that they are reverting those funds back into cold storage or they are accumulating new coins. Short-term holders are now big in profit. You can see in here that their average is around 93.7. In earlier this cycle being in profit, short-term holders lasted quite long. In this area in here, it lasted less. Notice that sometimes there are periods where it's back and forward being in profits or not in profits. After the 13th of May, having some outflows, now we have some inflows, positive moves for spot ETFs with 300 undoing what happened yesterday. We are still in grid at 70 and we are in an area of warning sell, golden sell from Cerberus. Watch the previous videos or ask the TTP agent what did I say about Cerberus in the TTP agent alpha, what it means and previous performance. All of that is part of the TTP agent. So we still have that liquidation at 106, and I think if we don't break down that neckline of the double top, or if we do that liquidity hunt scenario which is to lose that support, the neckline on the 4 hour, and immediately after coming back above the neckline, then I will say that the 106 can come back on the table, particularly if we just go to 100k in here and we take just that, and instead of retesting the neckline for further downside, we reclaim support, then the 106 becomes really attractive for a long. Just a quick look at how liquidity pools are progressing in the longer term. Still, the number one is 115, followed by 67, and number two is 125. Liquidation map on the 30-day, the highest level is 92.7. Let's look at the order book. Longs are stepping back in at 47 after lows of 32. That is a big increase in longs. Right there at the support, we have slightly more sell orders. You can see that on the ask is at the moment at 0.2. It's very flat though, but I would have expected in this area that says 0.2 to have a bit of these blue bars, which represent bidding, buying orders, holding that support. But instead of that, we have seen very mild support with this red candle, and then we are back in the red. So that is an alpha for potential weakness at the area where we are of 102. It's not decisive, nothing is in trading, but it's always good to take note of those things. Something that is the opposite is saying that there can be still a move up is the amount of shorts in the close proximity. We have 300k, and I will say that can move the price possibly to 103 or 104 just because of so many shorts at the moment very close to the price. And in the order book on fire charts, we can see that the biggest selling wall is at 110 with 70 million, and at 105 we have around 51 million, followed by 46 and 37. So definitely there is a wall of resistance around 105. 110 is the largest, and very close to the price at 103 there's only 32 million. But below the price, apart from this 31 million at 101, then we decrease to 22, 19, 23, 10. So support, it is thin at the moment. Not that people cannot just put a large order, market order at any time, but just worth mentioning. And the purple whales don't seem very interested in here. Anything can change at any time, but when the price is going down and I see the purple whales starting to push up, they act like a leading indicator, and that can help holding support. But at the moment, that's not the case. Let's look at the order book of Market Monkey Terminal, and we can see that that ask is located at around 105. We have some at 104.5, and below the price, there is nothing very significant, interestingly. Fair value gaps, we have up until 103 and 4. That overlaps with the previous fair value gaps that we saw that time from Lux Algo indicator. Below the price, we have this big fat dude and all the usuals that are in this area. So remember that if we get this double top pushing the price low, we could take a big portion of that. Notice as well that in all this area there has been double tops before another breakout. So do not trade just the technical target of a double top naively. This needs a little bit more of surgeon hands to deal with. Retail will just wait for the breakout, put a short right at the breakout, and be part of these pushes way higher that take all of them before continuing up, entering from slightly higher at a level of advantage, and then looking for invalidation even if you are in a small profit, and then pulling out when you notice the trap is kind of the approach that I like the most. If there is no trap and there is an actual breakdown, voila, you get a party, and finally you see a longer period, a longer streak of win, and of course larger profits. DXY at the moment is seeing a rejection to come back inside this lost trading range, but at the same time the weekly has consolidated in a breakout. So we'll see if DXY can continue up. Gold has done a big move here from 3.5 straight into the previous support of 3.1. The breakdown has played out so far. I still see a bearish pattern in here that could potentially continue into RSIs of 50. I remind you that my call is to go next to the 21 weekly on gold. VIX is right there above the support. Yesterday it was below it. I was complaining about that, but you can see that is at support on the ascending trend line on RSI weekly and at support on the price itself. This calls for an expansion, and most of the traders are counting victory in here because Nasdaq has managed to push above the final line in descent for a full 100% V recovery. Nasdaq needs to put an all-time high to prove right. And what could be really disappointing is if this week we close below 20.8 or even below the 21 weekly. At that point, we could see really a deeper correction on Bitcoin if that plays out. S&P has a small gap below the price in here between these two candles and is confronting the resistance on the downward sloping trend line on the RSI. Nasdaq as well, the resistance is at 58 and on S&P is at 59. Some people don't like numbers on RSI, so I'm just gonna put 58 here very quickly. So S&P can go up until around 600, Nasdaq can go up until 21.7, both of them slightly below the previous all-time high and still be within the limits of the top resistance, global resistance on the RSI. I'm not gonna look at the stocks, so you can see that we have tech taking the lead and the rest of the S&P has been in red. Crypto Bubbles shows pretty much everything in the red, and I wanted to cover Bitcoin Nasdaq ratio chart. And notice that the previous cycle we have 1, 2, 3, 4. This cycle we have 1, 2, and 3. So I am looking for a number 4 to match my pattern. Notice that the previous cycle, when we entered the area of bearish divergences, which is from the top number 2, top number 3, top number 4. The 4 is the confirmation into bear market after losing this final line. So if we apply those patterns on where we are at the moment, you can see a bunch of things. 2, 3, and 4 are lower highs. 2 and 3 are still higher highs, and this potential incoming number 4 has already taken the high of 3. Whereas the RSI is already on the way down. So how can we interpret that? Well, 2, 3, and 4 then are not bearish divergences and still led into a bear market, whereas 2 and 3 are already in the territory of bearish divergence. And after this breakdown in here, the rally of the RSI after the breakout on 31st of March has led just into this resistance of 68. We can see it there, and after the rejection that we are currently having. Why is this rejection? Because Nasdaq now is catching up on the move up, whereas Bitcoin is taking a retracement. There is a little bit of a balancing going on that I've been covering in the past 2 days in my videos, and that has caused that the ratio of these two assets show a rejection. Can we get something like this and pinch that resistance at 70? I will say that that's the most that we can see, and that will perfectly resemble this move there that will become part of a potential number 4 incoming in here. I do not personally expect a global breakout of the RSI after reaching this point. What I will potentially expect is a surprise, an element of surprise. Basically, seeing a rejection here, having a little bit of a deeper correction relative to the Nasdaq, and then having potentially a number 5 and being like, wait a minute, we always get 3 or 4, now we are getting 5. Well, possibly end of 2025 we get another one there, but I will say that the RSI here has to cool down. And notice that a cool down there doesn't necessarily mean that we don't put an all-time high, okay? If you are really eager to see that all-time high at a 0.4, possibly we will be putting an all-time high still, roughly around 120 or slightly higher possibly. And I also want to cover the ratio against gold, because gold is moving down and Bitcoin has moved up. So how is that looking so far relative to the previous moves in previous cycles? I'm gonna only focus on the cycle 2021 because these two previous cycles, they did not have a breakdown with retest. You can see that we just smash support and go straight into bear market. 1 and 2 go straight into bear market. Whereas 2021 breaks below and is a little bit more forgiving, because after breaking down, it kind of comes back for a revenge rally number 1 and revenge rally number 2, which even reclaims the lost support before going into the bear market. And those things are what I'm watching for. We lost the support. If we were to repeat performance of cycles 1 and 2 in the chart, we should have gone straight into a bear market. But no, we are having our first revenge rally into 60. And if we get that and we see a rejection and we have similar performance as 2021 and we do something like that before going into a bear market, that puts the top around October, this first stop around May. In 2021, we have a first stop here after losing support in August and the second one in October. So it will rhyme with 2021 in a lot of ways. So this rally getting into 60, 61, let's say 61. Let me put the cursor there. Yeah, it's a little bit more 61 than 60. So are we done with that? Not really. There's still a little bit of room to go in here. As you can see, we have 2 months up, but either this month or next month can still carry on a little bit higher. Notice that thanks to the ratio, this looks like no all-time high. That doesn't necessarily translate to the naked BTC USDT price chart. That one can do still an all-time high, whereas this could stop below that. Then if you get there and you get that small month of rejection like in here, and you come back down, and then you have a second revenge rally that puts an all-time high like in October 2021, then possibly we can do another move up and take that all-time high, put a new one. Still, all of that after having completely lost against gold. Just past performance, extremely interesting, and I wish I could fast forward in time to see what's gonna be the outcome. And BTC against gold again, but this time on the weekly basis, you can see that from 2015 up until COVID, Bitcoin was respecting this support on the ratio. With COVID, it lost the support. After losing support, we retest the lost support and we went sideways for a bit before a rally up, okay? So where are we here? We are in a very similar situation as COVID. We defended this whole cycle, we lost it, and we are right there at the resistance on the price. So if we were to repeat that, then we could do a little bit of sideways here before another move up. Just another interesting ratio chart that I wanted to mention to you. Guys, wouldn't it be amazing to get 30,000 in deposit bonuses? Well, Bybit is precisely giving that with my campaign. There's a link in the description. Sign up for a new account on Bybit. Get $50 sign up bonuses and 30,000 depending on the size of your deposit and trading volume. But it's okay. If you don't want to go KYC, you can look into my Blofin link. This one is non-KYC. The campaign ends today sharply. So be quick if you like this particular campaign that gives deposit and trading volume bonuses separately. It takes just 30 seconds to open the account, no need for KYC, and you get access to leverage in all coins anywhere you live. Thanks so much for watching. Elite members, I will see you later. Remember to vote for the coins that we're gonna look in the private session later today. If you don't wanna join, watch the video tomorrow. It's gonna be live in my channel for free to everybody else. Thanks so much. I'll see you later. Bye bye.